Right, continuing with the theme of Bitcoin blockchain use cases, someone who doesn't need too much introduction, a South African entrepreneur of note, Vinnie Lingham.
So yeah, I'm here to speak about alternative use cases for Bitcoin. Some quick background on myself and Bitcoin. I started a company about just over 4 years ago called Gift, and in 2012, this is based in Silicon Valley. 2012, we launched basically the first mobile wallet for gift cards. So you could buy gift cards on your phone, and you could send them to any friend anywhere in the country. They'd have to download the app. So kind of like a peer-to-peer gifting service using gift cards from hundreds of retailers in the US. And we signed up all the big retailers. I wouldn't say all of them at that point. In 2012, we signed up, it was some of the big ones, Gap and Brookstone, etc. So the ones that were sort of mid-tier, we only eventually got to the bigger ones later on. And but one of the problems we had as a company was that we couldn't guarantee that we wouldn't get defrauded, right? So we had a lot of credit cards being used on our system to purchase a gift card. Now, if you think about it, someone uses a stolen credit card on a mobile app on a phone and buys an Amazon gift card and sends it to somebody else, and they redeem those funds before we get told that the credit card was stolen, we lose the entire value of that gift card. And so it's a really bad situation for a merchant, especially when your margins on gift cards are like 10, 15%. One loss is basically eating up 10 of the sales. So we had to be very, very careful of how we accepted payments using credit cards. And the credit card fees are also pretty high, around 3%. So eating to our margins some more. So we started looking around at alternative payments. And we looked at PayPal, we looked at, which we did implement. We looked at checking accounts. We haven't done that yet. But it was an interesting time for us in 2012 because of this problem with online fraud and payment issues. So about the same time I was looking into this, chatting to friends in the Valley, and Bitcoin was coming to the fore. People were talking about it. It was very interesting. You kind of heard about it before, and in 2009, 2010, when it launched, it seemed like an interesting concept, but like who would ever use digital money? Who would ever do this sort of thing and go mine Bitcoins? And at the time, I remember playing World of Warcraft, and I was like, well, the Chinese miners just seem to mine all the gold. So, and they sell it to you for discounts on these marketplaces. And it didn't seem like a good idea to go mine Bitcoins. So I didn't wind up mining Bitcoins back in those days, and I kind of dismissed it. But as 2012 came around, and Bitcoin had gone through this sort of $30 spike from, I think, 30 cents or whatever it was, and then it crashed back down to under $1, there was clearly something there, but it still wasn't certain that it would take off, and there were a lot of technical issues with Bitcoin. As we got into early 2013, the price just kept going. It got back to $30. It kept climbing, 35. And I eventually bought some at 40 personally. And every day I would just look at the price of the coin and be going up, 45, 50, 60, 80, 90. Eventually got to $255 in around, I think it was around February or March of 2013. And at that point, there was just a lot of hype around Bitcoin, but no one was really using it. And there's no way you could spend it. BitPay and a couple of other processors weren't actually, they weren't everywhere. I mean, there are over 100,000 places accepting Bitcoin right now. At the time, there was maybe, I think probably 5,000 merchants accepting Bitcoin. And so then we looked at our app, and we said, look, we've got somewhere around 55,000 stores in the US that could accept Bitcoin if someone just used it to purchase a gift card. So you could walk into a Gap store and use Bitcoins in your wallet to buy a gift card from us and redeem that card in store instantly. So effectively convert your Bitcoins to dollars. And using a processor like BitPay, we could guarantee ourselves the funds. So we said, okay, well, let's try it. So we hacked it together one weekend, and we launched it, and I had a bet with one of my developers that it would do very well for us. I was pretty bullish about it, and he said it wouldn't. We bet a bottle of wine, and the first day we hit over $1,000 in sales, and it kept growing. And by the end of last year, last year we're the biggest seller, except of Bitcoin, I think worldwide, as a company. And so anyway, we sold the company in 2014 to First Data Corporation, the largest payments company in the world. But essentially, we use Bitcoin as a bridge to people who are underbanked, or people into the cryptocurrency community, people want to use Bitcoin for making purchases. And it was a very, very successful project for us. And so personally, I started looking at Bitcoin in many other ways and saying, what else can you do with Bitcoin? What are the alternative use cases? Because the currency model is, there's obviously you can't use Bitcoin in all parts of the world. There are legal issues and there are regulatory issues. So we had to be compliant with regulations around how much you can purchase, etc. So there are limits to it. But the volatility of Bitcoin makes it really hard for people to use it as a currency because we had situations where someone would go and buy Bitcoins on an exchange. By the time the funds cleared, the coins cleared, they didn't have enough money to make their $100 gift card purchase because the price had already changed. And so this was a huge customer support nightmare for us as well. So we had, the volatility of Bitcoin previously has been a big problem. Now it's not as much, but there's still within in a given day, there can be 10% movement. It's gotten more stable though. So my talk today is basically the journey I went on kind of after we've got this realization that Bitcoin was taking off and everyone's using it, and that currency is one way of using it, but there are other use cases for it. And so, one of the things that when you look at Bitcoin as a system for computing, what does it do really well? It actually scales trust, okay? Because Bitcoin is actually a very well-trusted system. I mean, I think everyone can agree it's the most secure cryptocurrency network out there. There are others that are coming up with different solutions, but in terms of hashing power and security, other than the 51% attack that could possibly maybe happen if the stars align there, it's a pretty secure system. And so when you look at how humanity has changed over time and how we are today, how we operate as a society, we trust the people closest to us implicitly. Like maybe there's 5 people in your life that you trust with your life, your family, and then you have your close circle of friends, you have your community, your neighbors, whatever it is, people you went to school with. But as you get further and further out, there's less trust. I mean, when you start talking about people who are, living in another country, there's no trust. E-commerce online has proven that, and the amount of fraud online is showing that you have to be very, very particular. So, in the same way that when we looked at gift card purchasing, we would never accept a credit card from Nigeria, for example, or even South Africa in most cases. The fraud rates are very high. Ghana was high. Africa, fraud rates on credit cards are ridiculously high. But we'd always accept Bitcoin from those countries if they want to make a purchase because we're guaranteed payment through the Bitcoin network. So from a currency perspective, Bitcoin basically gave us trust. We don't have to query the value of the method you're paying with. From a platform perspective, because it's people call Bitcoin programmable money, you can program trust into the network. So you can create smart contracts. There's a lot of things you can do. So if you look at how do we scale trust worldwide, the cryptocurrency movement is really one of the ways I think that trust can be scaled. And so when you start looking at the breaches of trust and how governments, I live in the US now, and the amount of data breaches that happen on a daily basis, I think there were 1,500 breaches last year. The Office of Personnel Management for the US government had a massive breach, 20 or 30 million citizens' information got out. This is to fingerprint data. So there's a big problem in how do you secure this? I don't have all the answers, but I can tell you now that the people I know who are looking into the space are using blockchain technologies to figure out ways to secure the databases and information a lot more. And so I think that as things evolve, you're going to find blockchain being used as a more secure means of containing and transferring information. So I want to touch on a little history here. I mean, in the past, call it 100 years ago or longer, people trusted physical commodities, gold. So you trust gold because there's proof of work. Someone had to go at some point in the chain, dig it out of the ground, purify it, whatever the case is, and create a coin out of it. And that gold was trusted and had value. And as you went from one country to another, it had kind of the same value on an international level. But in the past 100 years, we've largely moved away from the gold standard, and we now trust banks and governments. The gold sits in a vault, and they start issuing paper, and then they decided to sell the gold, and now it's just paper. So, we went from trusting something to trusting someone, and I think that the movement around Bitcoin right now is saying, well, let's just trust the math. Let's make sure we can issue something which is a digital commodity, which people can trust will not exceed 21 million units, and let's see how the market reacts. And I think the fact that Bitcoin still trades in the hundreds of dollars a coin is pretty impressive. And if you look at how it trades in South African markets versus the rand, and how the rand's actually gone against the Bitcoin because of the depreciation, it's interesting if you think of a global commodity. This is, I think, one of the most interesting social experiments for me, because in countries where there are capital controls, we're seeing much higher spreads on Bitcoin as a commodity than in countries without capital controls for obvious reasons. So I'm sure this is an advanced audience, but what is a Bitcoin? For me, Bitcoin is basically, and when I try to explain it to the layperson, it's a single unit of measure of which there are 21 million units in the network, and each Bitcoin can contain 100 million Satoshis, which are effectively fragments of that, and all those can be used for transactions, storing information, etc. And so it's just a really, really giant database or spreadsheet. And so when I say it's a commodity, it is a commodity because it's not money. I mean, not in the true sense of the word. It's a commodity that we use. And so when companies start using Bitcoin and they're using it more and more, then commodities become in demand. So the same way that I try not to refer to Bitcoin as digital gold. A lot of people do that, and there are a lot of similarities. But it's actually more like platinum. And the reason for that is that gold is something more of a consumer commodity. Consumers want to wear them as rings, as jewelry. The industrial use cases for gold are far more limited than the industrial use cases for platinum. So things like catalytic converters actually support the platinum markets in a massive way because the industry requires it, and therefore there's demand. If consumer demand for gold drops, gold drops. But for Bitcoin, because I don't see the consumer use cases for Bitcoin in the near term being all that great, there are some. I see the industrial use cases for Bitcoin being a lot greater. I think it's more like platinum. I'm going to invest in probably, directly probably 5 or 10 Bitcoin companies and probably 50 through funds in Silicon Valley. And I'm seeing a lot more industrial use case type businesses, so businesses that are using Bitcoin to create technologies for other businesses, for B2B usage, than I am consumer. So from my perspective is that Bitcoin right now is really hard to use for consumers. The decimal point system in Bitcoin makes it even harder to do calculations on the fly. I've been advocating moving to bits as a unit of measure for Bitcoin, and it's just the Bitcoin universe moves slowly with these things for good and bad reasons. But so what the network does do is it solves the double spend problem, as you'll probably know. And so that you cannot spend a Bitcoin twice. And that's the real power of what cryptocurrencies has brought to the market. And just a brief history of time, how the Bitcoin prices has evolved. It was a huge spike in 2014, came down, and everyone's kind of waiting for the next spike, because I think everyone who's passionate and believes that Bitcoin is undervalued knows that at some point, probably after halving day comes later this year in June, July, where the supply of Bitcoin goes down from 100,000 coins a month down to 50,000 coins, you will probably see a lot of upward price momentum just for supply and demand reasons. Bitcoin obituaries. It's widely known that Bitcoin has died 72 times, at least. Okay, if you go and read online, there's always I think it died again in January with Mike Hearn's post on Bitcoin is dead and why he sold all his Bitcoins. And this is sort of like, reminds me of the internet back in 1999, 2000. Everyone in this room in South Africa knows that in 2000 the internet died, right? It was dead. No one wanted to be part of it. And so that's how the rest of the world looked at it. But Silicon Valley kept going and kept building bigger and greater companies like Google and Facebook and whatnot afterwards. And so then everyone else waked up and realized the internet is actually pretty big. And so I think Bitcoin's probably going to go through the same psychological cycle. What's also interesting is the fast-growing developer interest in Bitcoin. It's exceeded PayPal nearly 6 months ago, and it's still growing at a rapid clip. However, I must mention that Ethereum is growing really quickly as well. And so the risk to Bitcoin right now is Ethereum is a major, major risk, because the stigma attached to Bitcoin, over the past with consumers and banks and whatever else, it has actually had a massive impact on the adoption of Bitcoin within the financial institutions more than in other industries. I think other industries are more open to it, but the financial institutions are moving more to Ethereum. And the price of Ethereum is up 500% this month. So it remains to be seen what happens, because again, when a price of anything spikes 500% or more, you're going to find people selling, and it'll find a settling price at some point. But I think there is a risk to Bitcoin right now, and I think the core developers are concerned. I'm on the board of the Bitcoin Foundation, And we haven't actually had this discussion yet about Ethereum, especially in the past month. We haven't had a board meeting since. And I think it's interesting that the amount of support they're getting. Microsoft just adopted Ethereum for some of their projects as well. So it's something to look into. And I think Bitcoin, although it's more secure, I think, than Ethereum right now, there are other risks to Bitcoin. So again, the analogy is this: first .coms kind of looked like that, and Bitcoin looks like that. And if it plays out the way the .com era played out, Bitcoin could be big, but again, existential risks. So some of the alternative use cases for the blockchain, and I mean, they're actually way more than 5, obviously. The list, I sort of pared it down to 5. I think they're pretty important right now. The report from IBM that came out yesterday and a couple of days, it's in the 20, 30, 40 range. So there are a lot of use cases that's being explored right now, and there are a lot of companies in the space. So, identity, I started my new company last month called Civic, and we're using the blockchain for identity. If you think about, you guys will appreciate this, when you travel outside of South Africa now, I still have a South African passport. You go to London, I need a visa. Go to Switzerland, I need a visa. It wasn't the case 10 years ago. You could travel around the world. You could at least get through London pretty easily and go to Switzerland easily and a couple other countries. And now, because of the fraud at, Home Affairs and how easy it is to just buy and get passports issued, we're kind of stuck with these green books, which aren't very good. So I think that there's a need to pair something which is immutable, like the blockchain, with something which, like identity. So if you think about it just at a high level, if someone is born now and it was registered on the blockchain today, and they needed a passport in 18 years' time, and you looked on the blockchain and the information was there, you're pretty certain that that person was born, because there's no way after all these blocks are being added for 18 years that that person, you can't fake that record. And so that's not exactly what we're doing, and we haven't launched it, so I can't give too much away there. But if you think of the blockchain as an immutable store of information around people and identities, and you look forward in time, you could actually stamp out passport fraud, identity fraud, and that sort of thing using the blockchain. So that's personally, when I left GIFT, this is what I wanted to pursue, because I looked at the blockchain as being something where there are so many different interesting use cases. If you can apply them in interesting ways, you can build the next generation of company. Distributed storage systems, there's something like Storj.io, there's Filecoin. I'm an investor in Filecoin. And they're doing some really interesting things. So Filecoin, who of you guys have looked at IPFS.io? Okay, what do you guys think? Okay, so keep an eye on this company. So they're the guys behind Filecoin. It's my largest investment in the Bitcoin space. And I think I'm probably the largest investor in the company. But it's amazing platform, and they're killing it right now, and the product's amazing. So that distributed storage systems like Filecoin, I think, are going to be interesting. It's not it's not Bitcoin based, but it's a blockchain type solution. Very interesting. Obviously, legal documents as well. Voting, something which I took a keen interest in as well. Part of Civic, because it ties into identity, right? So one of the biggest problems with, you ask yourself, like, why don't we have voting on our mobile phones right now? Okay, like, why can't you just vote for local elections, national elections? Why is it not possible? There's 2 reasons. One is legislation is probably, in the US, I did the research on this, and it's about 6 or 7 years behind where it needs to be to enable mobile voting. I mean, they're literally like moving to email registration and online registration for voting now in some states. It's just 6, 7 years away, but it will get there. The second reason is that identity is just not solved. So one of the problems is how does the government know that it is you behind the phone? How do they prevent someone from running some sort of malware script that triggers votes across multiple devices at the same time? There's a lot of issues around securing identity on mobile devices or digital devices, and biometrics is actually making it a lot more easier. So if you could have Touch ID on a voting app and your fingerprints registered, etc., you could do a lot more things with that, and the malware in theory wouldn't be able to do that and trigger the votes. So the technology is not there yet. The layers around voting is not there, and the legislation's not there. But you look 5, 7, 10 years out, I'm hoping in our lifetime we'll be able to vote for local and national elections, on our phones. Governments may not want that, but from a technical perspective, it should be possible in that period of time. And then some social networks have pitched up with blockchain-based solutions. Again, I think that's an interesting space. You know, I know you guys use ZapChain. It's interesting, but it's very much niche audiences. I don't know whether it'll go mainstream. So another use case which I pioneered at Gift before I left was basically creating a gift card blockchain on the back of Bitcoin. And we partnered with a company called Chain.com to do this, and we launched it about a year ago in Belfast. It's a really interesting world because in the gift card world, anyone who issues gift cards on behalf of merchants, you basically are the register of data. So, you know, it's think of it as a debit credit ledgering system. You give me $100, I give you a promissory note from that, a code from that merchant for $100. And when you spend 10, I deduct it, and you know we keep a record of it back and forth. And eventually you deplete the funds. But you know what happens if you spend 10 on that gift card and then you sell it to someone else and you say, well, here's you know, give me $90 and you can have the card. You still have a copy of the code. So because these codes it's like PIN codes, right? With airtime PIN codes, except that the full amount is not redeemed every time you type it in. It's partial deductions. It creates a massive problem in the industry where there's people sell these gift cards online, and when you check the balance is there, when you walk into the store, the money's gone because the guy had a copy of the code and he used it, and it's a massive problem. And so what we did was we said, okay, well, let's create a system where you know, you have the processor, you have these are the people in the value chain: processor, distributor, the gift buyer, the receiver, and the merchant. And let's make it like a one-time a code that keeps changing, basically. So like a two-factor authentication code on Google Authenticator. So the code keeps rotating, and we're using the blockchain to store data in OP return, and you have to have the cryptographic keys to basically issue new codes. And so therefore, you could basically move that code from one app on your phone to app on someone else's phone, and it's a whole new code every single time, and they can check the balance on the blockchain independent of the company. And if the merchant decided they don't want to use Gift, because again, you know, we think that the processing space is just very commoditized and there's no real value add there, we focus on the consumer experience, you could basically move these gift codes, you can move to a different vendor and they can still live off the blockchain, get the information of the blockchain, and you can be independent of your processor. So we've been experimenting with this with small businesses. It's worked really well. And I left Gift, like I said, earlier this year, so I'm not up to date with what's going on right now, but this is one of the projects that they have on the go, and it's actually just very interesting. So I love the way this is playing out. You know, and it's just an interesting model, because when you look at how much fraud, the gift card space is in the US, so you guys know, it's about a $150 billion market a year. I mean, that's half the size of the African budget. It's huge, and so yeah. So this, you know, the Bitcoin block. So the one last point I'll make is, if Bitcoin is going to be the ultimate source of truth, the immutable blockchain for the world, and whatever else, I think that the model that it's going to have to adopt, and you probably, if you guys are familiar with Blockstream, I think they're kind of doing something like this, but the model that's going to go forward is a federation of chains. So you basically will have multiple chains all syncing up to the blockchain as the single source of truth. So you can operate independent chains, but there's some sort of federation, and Bitcoin becomes like the central master backbone of the cryptocurrency world. Who knows? You know, that's one possible plausible outcome. But I think it's interesting, and I think given the amount of momentum that Bitcoin's got with the international developer community, it may wind up being the way it plays out. And yeah, so I think just in summary, I'm very much a big fan of the notion of having one massive public ledger, and the Bitcoin one being obviously one I'm most in favor of, because of these reasons. You know, it's immutable, it can't be changed, it's trustless, it's secure, and it's distributed. And I think that these are the principles, I think, for what Satoshi, whoever he is, built Bitcoin on. And I think we've largely kept it intact, but I think there has been a sense of complacency that's emerged in the Bitcoin world, and there's a lot of debates going back and forth, and there's a lack of action. I think the block size debate has been a massive, you know, it's set us back many months, and we have to get past it very quickly. I think it needs to come to a head soon. And you know, if you want to get started with Bitcoin, you haven't done it yet, or you're interested, these are some of the sites that I recommend and use. Locally, BitX. I buy on Coinbase mainly because I'm in the US, and Yeah, I invest in a company called Streamium. It's actually very interesting. You can pay for streaming content using Bitcoin. It's more of an open source project. And ChangeTip is interesting as well. It's basically a Bitcoin tipping service using Twitter and obviously Gift as well. So that's it. I'm open to questions now.
Great, Vinny, thank you very much. And I think, Vinny, going back to your earlier slide of the blockchain use cases, it's great to see that we have 3 representatives from 3 of those companies here today. 2 founders, one CMO. So I think testimony to the quality of the speakers, and certainly the audience is up for it. Questions?
Hi. How do you feel that the arbitrage is holding back the Bitcoin industry at the moment in South Africa?
I'm not sure what you mean by the arbitraging what? The exchanges or?
The price of Bitcoin in South Africa.
No, I don't think it's holding it back. I think it's just reflective of market conditions. I mean, the rand is, I know it's cheap, but I think it's still, it's. So the thing about this is you take the perspective that Bitcoin is the ultimate free market. Okay, it trades worldwide without restrictions. Largely, there's no government control over Bitcoin. There's regulation on money going in and out. So KYC and AML, so know your customer and anti-money laundering. But it largely trades at the market price at any given point in time. So in terms of a perfect market, it's probably the most perfect market I've seen because there's no inside information, insider trading. There's no company being run. It's very different from a public stock being traded. You know, the only thing I can think of is that someone would be doing insider trading, knowing that the government's about to buy 1 million coins. Like that could happen in theory. But I think it reflects the situation in South Africa right now, where there's more money trying to get out of the country than in, and so the arbitrage guys, traders, they provide liquidity, and that's the market clearing price. People are still buying at that price. There's a reason for it.
Vinny, thanks very much. Very insightful talk. Just your view and your opinion on the block size and the scalability.
Yeah. So I'm of the opinion. Okay, I've got 2 opinions. One is I'm really glad that it's taken us this long, in a sense, to get to this point, because it means that even the most smallest or seemingly mundane changes in the Bitcoin world gets discussed and debated to exhaustion. And so, therefore, it's a pretty stable platform if you think about it. Like, we don't actually make changes, easily. And the one thing I would say is that there's a lack of practicality because there's no sort of benevolent leader and there's no CEO of Bitcoin. The problem we have is that no one can make a fucking decision. And it irritates the heck out of me, okay? Because honestly, like if this was a company, someone would have said a year ago, we're doing this, we're done, move on. But it's not, and that's the problem. So it's a massive social experience whether the smartest people in the world can stop acting stupid or not, right? And I think where we're at right now, I think I'm a big fan of Jeff Garzik, what he does, and his views on it. I think, look, there's 2 options. One is, we just expand the block size to a programmatic. This is Jeff's proposal was that it basically is it's formulaic based upon historical data, and it self-adjusts based on what the needs are for the blockchain. So you make it programmable, so it's never up for debate again. The other option is just kick the can down the road and move it to 2 and just figure it out later on. I'm okay with either. Just can we make a decision on one? I think that kicking the can down the road is fine, and we can have the decision later on. But we have to have a decision, and that's the problem right now is we just don't have a decision, and we don't have one that's fully supported. It's coming to a head though, because I think I think we're close on a decision. It's probably going to just be a move to 2, which is fine, but it's going to have to be dealt with again in a couple of years' time.
Great. Any more questions?
Hi, Vinny.
Hi.
My question is regarding consumer trust in Bitcoin, which you briefly touched on. In your opinion, do you think that in order to get mass adoption of Bitcoin, companies should try and advertise Bitcoin more in order to get more trust, or do you think that companies should start building Bitcoin into things sort of in the back end that the consumer never sees, so that consumers start adopting new things, but they don't actually know that it's kind of powered by the blockchain and Bitcoin? Which version do you think is better?
I'm on the latter, because I think that I've always said that Bitcoin becomes successful when everyone's using Bitcoin without knowing they're actually using Bitcoin. Bitcoin is fundamentally a very tough user experience problem to solve. it's really hard to get people adopted to a new currency, a new exchange rate, and unless we move to bits as a unit of measure for Bitcoins, I just don't see it happening with like, hey, this cup of coffee is 0.001 Bitcoin. It's just not a consumer-friendly thing, and I spent many years in the consumer business and building consumer-based companies. I just don't see it happening. So unless we can make, unless we get to a point where Bitcoin can become more UX-friendly, so user experience friendly, it's going to be stuck in the back ends of most companies, which is fine. It doesn't have to be one or the other, and it could evolve over time. You may find that Bitcoin only takes off in 20 years' time when the kids being born today grow up with techie parents like me. My kid knows what Bitcoin is. He's 6 years old. And maybe he'll be using it one day. As a result, that's one outcome. I think for a year and now, to be practical about it, it's probably more back end than front end.
Hi, Vinny.
How's it?
Thanks very much for a very interesting talk. You mentioned two things which I think are related. You talked about Ethereum as a threat to Bitcoin, and then you also talked about multiple chains basing themselves off Bitcoin.
Well, not basing themselves, but pegging to the blockchain.
Pegging to Bitcoin. So my question is, wouldn't a more desirable future be a whole lot of blockchains or independent blockchains that are interoperable as opposed to centralizing on Bitcoin? Because that's effectively what you're proposing, is that Bitcoin becomes a central backbone for everything else.
No, that's not what I'm proposing. What I'm saying to you is that, there's so much hashing power in blockchain right now that if someone, for example, if someone has a separate chain and they publish a hash of that chain every hour to the blockchain, and you want to compare the hash later on in the future, you can be almost guaranteed, you can be assured that that chain hasn't been modified because they published a hash to the blockchain at a point in time, and you know that the blockchain is more secure and hasn't been changed. So when someone has a private chain, how do you know they haven't changed something?
So let me restate the question a little bit. Different blockchains have different strengths and weaknesses based on their design, based on their network effects, based on how well they're used. Bitcoin is very strong in, for example, security because of its hashing power and proof of work. But Ethereum is proving that it's very good at other stuff. So rather than saying, let's peg everything to one chain, wouldn't it be better for the industry to try and find a way to interoperate between all of them and to let blockchains evolve that are very good at a use case, and targeted at that use case? And then, the way, for instance, Factom do it is sort of hedge their bets a bit. And if you're going to use a blockchain, for instance, for provenance, use a bunch of them and be able to sort of pick 2 of 3 when you need to do verification or something like that.
I don't think it's either or. I think it's probably both. I think that you probably have, you're never going to get everyone to agree to do one or the other. So it's going to be, both will happen. Yeah.
Any more questions? Great, Vinny, thank you very much. Thank you for your time.
Guys.
Thank you for coming out to South Africa to share your time with us.
Thank you.